Hello and welcome to another update video about ADA. We are observing the market and what does it tell us? Well, I cannot identify 5 waves up. We've been talking about that before. We talked about that only yesterday. I still need one more high, okay? So we talk about a possible micro count for this 5th wave in this video. And also we talk about which level needs to hold to keep the idea of a 5th wave to the upside alive. It has turned into a very messy structure. However, we have identified that, first of all, that ADA is anyway in this 4th wave. Okay, maybe it's complete, but then the market hasn't given us evidence for it. So that's obviously the idea, you know, that the 4th wave could have completed here on the 23rd of January. That is possible, okay? So that's why I gave you the larger support area, which is relevant as standard support for such a 4th wave. And it starts at 50.8 cents. Okay, we are just below that. Just trying to break out of this zone here, of this first Fibonacci level. But now it's all about watching the micro to understand if this 4th wave is really over or not, or at least what do we need to see to believe that or to get some evidence for that. The 5th wave to the upside, if it happens, which I currently assume in my primary scenario, should take us to 85 cents plus. Okay, 85, 96, they are key levels to watch to the upside. We also identified this descending wedge pattern that is generally a bullish pattern, or let's say it's at least a pattern of consolidation, a corrective pattern. If that happens in a local downtrend, it would indicate that this is a pattern in which at some point the correction should finish, ideally when hitting a support level, for example 43.9 cents, and then we could see the breakout that follows and takes us up towards 85 cents plus. Now, normally the first target for a wedge breakout is the beginning of the wedge. That is up here. So it is very likely that the market would see some resistance there anyway. So yeah, we could define that as a first target for a wedge breakout. That is at around 67.7 cents. Sounds really good to my ears, you know, getting back up there, climbing up the mountain. But there are resistances along the way. So there is micro resistance at 53.7 cents. That's the level that needs to break so that we get at least 5 waves up. And then in the course of the breakout, we need to see the break above this spike, X wave high at 61.5 cents. That would be a strong suggestion that the 5th wave to the upside is unfolding and that wave 4 already bottomed. But until I see a 5-wave pattern, I cannot confirm that this low has already formed. It is very draining, very boring price action. We can, however, keep the idea alive that the 5th wave is unfolding. And why and how? Well, let me just adjust something here. Obviously, I gave you this support area, micro support, in one of the previous videos at some point during the week. And I highlighted to you that, okay, as long as we're holding there, this 48.7 cent level, we could look towards, you know, the possibility of 5 waves up. Okay, so first of all, if it is, it would have to be a diagonal. So if it is a diagonal, these often respect trend lines. So let's draw a trend line. You see here we have pretty much, it's not perfect, but sort of 4 touch points. So that's one aspect here. Yeah, so it would have to be an expanding diagonal, however. And then if the 5th wave is unfolding, it certainly needs to stay above the 23rd, what is it? No, 31st of January low, 1st of February low at around 48.7 cents. And it would have to be an ABC structure. So this could, for example, be an A wave, currently a B wave pullback, and then one more high in wave C could unfold. If this C wave starts from here, for which I don't have any evidence other than a green candle down there, well, what would be a target? We can define the 100% extension level as one of the main levels to watch. And it's the 54.1 cent level, possibly 55, 55.7 are key levels there. But I will take it off the chart because we haven't even got a, you know, confirmed start of wave C. I just want to mention to you what's the level that needs to hold? Conversely, obviously, a break below that level would suggest that indeed this white B wave started. It's not a great, I mean, what happened, sorry, the wave B topped. So if the wave B topped, we're dealing with a similar structure as on the ETH chart. 1 down, 2 up. This could be a wave 3 down, 4, 5, and that could be it towards 44 cents. I have to say though, this is also not a great 1-2 setup because it's corrective, it's overlapping to the downside. So therefore that doesn't leave us with clear probabilities on the smaller time frame. That's why we just need to let the market reveal its true intentions first. By, for example, giving us 5 cents, 5 waves to the upside, then we can work with that at a support area for the subsequent pullback, or by breaking below micro support, then at least we have a clear preference towards a C wave that could reach 44 or even 39 cents. That's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.